British industries collapsed, while African manufacturing boomed. The old economic order cracked as Africa's youth, resources, industries, and unity pushed it to the front of global development. Suddenly, it wasn't Africa looking to London for opportunity, it was London looking to Africa for survival. Europe watched in disbelief as Africa seized global influence, controlled key minerals, attracted record investment, and reshaped the world's economic map. The UK's downfall wasn't just a crisis. It was a sign.
In West Africa, where I somehow managed to survive a bloody and violent attempted coup. So if the Prime Minister wants any ideas about how to do that, he only has to ask. The Prime Minister's questions last week was, Mr. Speaker, an absolute bin fire. So if the Prime Minister is indeed intent on promoting the United Kingdom on the world stage, please can he promise the House that he...
£0.9 trillion in debt, and it's not stopping. Every month, that number grows by about 17 billion. Today, Britain's debt is bigger than its entire economy, and now a new danger looms. The cost of borrowing is climbing to levels not seen in years. For the first time in decades, people have begun to ask, can the UK actually afford all of this debt? For years, UK government bonds...
But while London clung to the past, Africa was building the future, faster, smarter, and stronger than anyone expected. From mineral refineries in southern Africa to tech corridors rising across West, East Africa, from massive renewable energy grids to continent-wide trade networks. Africa wasn't just growing, it was exploding into a new global powerhouse, and as Africa surged forward, the UK stumbled. Capital flew out of British banks and into African markets.
£0.9 trillion in debt, and it's not stopping. Every month, that number grows by about 17 billion. Today, Britain's debt is bigger than its entire economy, and now a new danger looms. The cost of borrowing is climbing to levels not seen in years. For the first time in decades, people have begun to ask, can the UK actually afford all of this debt? For years, UK government bonds...
Warning signs were small at first. Factory closures in the UK, investors quietly pulling out of London, markets hesitating each time the British pound dipped. But the real shock came when the world realized where that money, energy, and momentum was going: Africa. For decades, the UK believed it would always sit safely at the center of global trade, finance, and political influence. It believed its historical ties would guarantee loyalty, access, and dominance.
The crisis began quietly in London, just numbers on screens at first, then little tremors in the markets. Analysts dismissed them as temporary distortions. Politicians brushed them off as routine fluctuations. But beneath the surface, something was shifting, something deep enough to crack the foundation of the United Kingdom's global standing. Few understood it, even fewer dared to say it aloud. The UK was slipping, declining in influence, losing economic muscle at the very moment Africa was rising with unprecedented force. The global economic map was redrawing itself, and for the first time in centuries, the UK was not sitting at the center. Instead, it found itself pushed to the margins, watching as Africa took the space it once occupied, an outcome London never imagined possible and never prepared for. The trouble accelerated when key sectors in the UK began collapsing almost simultaneously. The manufacturing sector shrank at a record pace as energy costs soared, supply chains fractured, and global investors dumped British assets for safer, faster-growing markets. The financial district faced its worst capital flight in decades. High-tech firms relocated to emerging innovation hubs in Kenya, Rwanda, and Nigeria, where governments offered faster permits, cheaper electricity, lower taxes, and massive pools of young talent. Meanwhile, Africa was booming. After decades of negotiations and restructuring, the African Continental Free Trade Area had matured into a super economy, seamlessly connecting markets that once operated in isolation. New transportation corridors connected ports in Ghana, Kenya, and Djibouti. Special economic zones emerged along the coasts of Tanzania and South Africa, humming with factories producing everything from electric vehicle components to agricultural processing technology. Global investors didn't need convincing. They moved their money where growth was undeniable, and that meant Africa. The shift was so swift that London found itself facing something it had never experienced in modern history: irrelevance. The shock deepened when reports confirmed that Africa had overtaken the UK in attracting foreign direct investment for the third consecutive year. Even more stunning was that the investors weren't just choosing Africa, they were abandoning the UK pension funds, sovereign wealth funds, and multinational corporations quietly slashed their exposure to British industries, citing political uncertainty, slowing growth, and rising risk. What London failed to grasp was that Africa wasn't simply rising. It was transforming. Energy grids were modernizing with solar and geothermal power. Digital finance innovations led by West and East African startups outpaced those in Europe. Mining giants struck deals across Zambia, Namibia, and the Democratic Republic of the Congo to secure the minerals needed for the future economy: lithium, cobalt, copper, nickel. Africa wasn't exporting raw materials anymore. It was building factories to refine them, process them, and ship them as high-value goods. This was the part that threatened the UK the most. For centuries, Britain had benefited from Africa exporting raw resources and importing finished goods, but the old model was dead. Africa now controlled more of the value chain than ever before, and the profits were enormous. The British pound weakened as investors questioned the country's long-term prospects. Inflation surged, hitting ordinary households the hardest. Energy shortages forced industries to ration electricity, slowing production even more. In contrast, African countries with abundant sun, wind, and geothermal reservoirs expanded renewable infrastructure at lightning speed, slashing energy costs for new industries and giving manufacturers incentives to set up shop on the continent. The turning point came when a coalition of African nations announced one of the boldest economic strategies the world had seen: a continent-wide investment redirection plan focusing on local manufacturing, agricultural processing, renewable energy, and high-tech industries. Instead of exporting wealth to Europe, Africa began absorbing it, growing it, multiplying it. London underestimated how quickly this shift could happen. The UK had assumed its historical ties would guarantee influence, trade advantages, and investment partnerships. But Africa wasn't looking backward. It was looking forward to China, India, the Gulf states, Southeast Asia, Latin America, and its own internal market of 1.4 billion people. It wasn't long before Africa surpassed the UK in GDP growth rate, infrastructure expansion, and industrial investment. Economists in London were stunned. As African stock markets outperformed European ones, a new generation of African millionaires emerged from manufacturing, logistics, fintech, and mineral processing. The global media called it the Great Reversal. London called it a nightmare. One of the deepest wounds came from the food and agriculture sector. Once heavily dependent on European imports, African nations shifted towards self-sufficiency through massive agricultural modernization projects. Irrigation systems expanded across Ethiopia and Sudan. Smart farming technology spread throughout West Africa. High yield crop varieties and climate-resilient seeds boosted output at historic levels. Europe, facing labor shortages and energy crises, struggled to maintain its food production systems. Farmers in the UK were squeezed by rising fuel prices, fertilizer shortages, and collapsing export markets. Africa, on the other hand, became a global agricultural powerhouse, sending grains, fruits, and processed foods to Asia and the Middle East while building its internal markets. This shift devastated London's agricultural exports and eliminated thousands of farming jobs. But that was only the beginning. The financial shock hit next. African nations launched a coordinated move to settle more of their trade in alternative currencies, reducing dependence on the British pound. As more countries joined, the pound weakened, foreign reserves shrank, and London's ability to influence global markets diminished. Meanwhile, African financial centers grew rapidly. Banks in Lagos, Nairobi, and Johannesburg expanded across the continent, offering services that attracted capital from Asia and the Middle East. Fintech innovations, faster, cheaper, and more accessible than European systems, drew millions of users daily. The UK responded with emergency policies, but none worked. Tax cuts failed to stimulate growth. Investment incentives could not compete with Africa's young workforce and booming markets. Diplomatic missions tried to renegotiate deals and restore influence, but African leaders were no longer dependent on European approval. The power dynamic had flipped. The most symbolic blow came when an international trade survey ranked Africa as the most promising region for future investment while placing the UK far below countries it used to outperform. Headlines across global newsrooms captured the shock. Africa emerges as global growth engine, UK slips further behind. Investors turn to Africa as London faces industrial collapse. Africa's rise becomes Europe's biggest economic threat. Inside London, frustration turned to fear. Government leaders met in emergency sessions to discuss the erosion of the country's economic foundations. But every policy proposal ran into the same obstacle. Africa had already moved on. It had become too strong, too united, too valuable to the world economy to be ignored or manipulated. The reality was undeniable. Africa's rise wasn't happening because the UK failed. It was happening because Africa finally had the confidence, resources, and strategies to thrive independently, and that growth was so powerful that it magnified Britain's decline. Even British companies began relocating to Africa to survive. Manufacturing giants opened plants in South Africa and Kenya. Tech firms shifted research teams to Ghana and Rwanda. Agricultural corporations invested in Nigeria and Tanzania, where fertile land and expanding infrastructure offered opportunities Europe could no longer provide. Within a decade, Africa had transformed into the world's fastest-growing economic zone. Meanwhile, the UK, unprepared for the new era, faded into economic stagnation. But the greatest irony of all was this: Africa wasn't intentionally trying to make the UK fall. It was simply rising, finally taking its rightful place in the global economy. And in doing so, it revealed the fragility of a system that had long relied on Africa staying weak. Africa's strength became London's weakness. Africa's wealth became London's loss. Africa's rise exposed the cracks in a European model built on old assumptions and outdated power structures. By the time the UK understood the scale of the shift, it was too late. Africa had already secured the global spotlight and the investment, industries, and influence that came with it. In the end, the downfall of the UK wasn't caused by a sudden crisis or external attack. It was caused by something far simpler, far more powerful: Africa finally rising to its full economic potential, and the world would never be the same again. The shift became impossible to ignore the moment trade statistics revealed the truth. Africa wasn't just rising, it was accelerating at a pace the UK could no longer match. The gaps widened each quarter. While London struggled to stabilize inflation, African currencies and emerging blocs strengthened, while British factories laid off workers. African industrial parks opened new production wings. While government officials in the UK scrambled to negotiate better trade deals, African leaders were signing multi-billion-dollar partnerships with Asia, the Middle East, and South America. It was as if the world had discovered an entirely new economic frontier, and it was located in Africa. The catalyst for the next global shock came from the mineral sector. African governments approved a continent-wide strategy to process minerals locally instead of exporting raw ore. This policy alone flipped global supply chains upside down. Factories in Europe, already struggling with high electricity costs, suddenly faced shortages of processed lithium, cobalt, manganese, and rare earth metals, materials essential for electric vehicles, aerospace systems, and advanced electronics. In contrast, African refineries sprang up with astonishing speed. A massive plant in Namibia began refining lithium into battery-grade materials. Facilities in Zambia and the Democratic Republic of the Congo processed copper and cobalt locally, tripling export value. South Africa expanded its rare earth operations, offering finished products instead of unprocessed mineral shipments. The UK's technology and automotive industries were blindsided. For decades, they relied on cheap African raw minerals routed through European processors. But now, Africa was earning 10 times more by doing the refining itself, and the profits were astronomical. Investment advisors in London sounded the alarm. Without access to affordable minerals, UK factories faced closures, production costs soared, supply chains stalled. And the African nations that once provided raw materials at low prices now sold refined products at global market value. The UK couldn't compete. But Africa didn't rise solely on minerals. The continent had become a hub of innovation, something London never expected. Tech corridors blossomed across East and West Africa. Universities partnered with global research institutions to expand AI, agriculture, robotics, and renewable energy engineering. Startups in Kenya created payment systems more efficient than European banks. Drone delivery networks in Rwanda outperformed postal services in multiple Western nations. Nigeria's fintech advances attracted billions in foreign investment, surpassing several UK-based tech incubators in valuation. This technological momentum created a self-reinforcing cycle. The more Africa innovated, the more investors poured in. The more investors poured in, the more Africa built. Eventually, the UK found itself asking a question unimaginable a decade earlier. How did Africa become the world's new center of gravity? But the most powerful force behind Africa's surge and the UK's downfall was the internal continental market. A population of 1.4 billion people, most under 30, turned Africa into the largest consumer base on Earth. Middle-class expansion in countries like Egypt, Ethiopia, Morocco, Nigeria, Kenya, and Ghana created a demand for goods Europe couldn't supply affordably. African-made products now filled African shelves. Clothing factories in Madagascar produced garments for West African department stores. Automotive plants in Morocco assembled electric vehicles for the entire continent. Solar panel factories in Ethiopia provided renewable energy systems that once came from Germany or the UK. London watched helplessly as exports to Africa plummeted. Trade statistics showed declines across almost every sector: pharmaceuticals, machinery, processed foods, automotive parts. The UK had priced itself out of a market that no longer depended on it. Meanwhile, Europe battled energy crises, aging workforces, collapsing industries, and declining competitiveness. Africa faced none of those challenges. The final blow came in global finance. Major banks in Asia and the Middle East shifted their African investment portfolios into long-term strategic positions. Infrastructure bonds issued by Kenya and South Africa became some of the safest and most profitable in global markets. Even small African nations attracted more investor confidence than the UK, whose political divisions and economic stagnation frightened global markets. The financial sector in London had once been Europe's crown jewel, but now African stock exchanges in Johannesburg, Lagos, Nairobi, and Cairo began listing multinational corporations, seeking access to Africa's booming consumer base. For the first time in modern history, London was not the preferred destination for global IPOs. The world had changed and Africa had changed with it, while the UK hadn't. Inside government buildings in London, economic strategists struggled to understand how the nation had fallen so far, so fast. Many believed Africa's rise would be slow, gradual, manageable. But Africa had leapt forward in giant steps, and by the time the UK recognized the transformation, the gap was already too wide. British diplomats desperately traveled across several African capitals, offering new partnerships, incentives, and deals. But African leaders approached negotiations from a position of strength, not subordination. The era of dependency had ended. The era of African leverage had begun. One African minister articulated a truth the world had been avoiding. The UK is not leading anymore because it is not growing anymore. We are, and that statement encapsulated the global shift. African nations controlled the minerals needed for future industries. They possessed the youngest labor force in the world. They had the fastest growing cities, the most promising technological frontiers, and the largest untapped markets. The UK, in contrast, battled demographic decline, industrial stagnation, and geopolitical fragmentation. Investors weren't abandoning the UK out of spite. They were simply following the future, and the future was African. But the most profound transformation was psychological. For centuries, Africa had been treated as a resource base for other nations' prosperity. Now it was rewriting its story, its destiny, its power. The continent no longer sought approval, aid, or validation from Europe. Instead, it built partnerships on its own terms with Asia, Latin America, the Middle East, and within Africa itself. This newfound confidence reshaped global politics. African blocs influenced energy markets, trade agreements, and diplomatic negotiations. When Africa spoke, the world listened not because of charity, but because of necessity. The UK found itself requesting access to African markets it once dominated. It sought investment from African funds that once depended on British banks. And in a twist history could never have predicted, African corporations began acquiring struggling British companies, buying stakes in industries London could no longer sustain. The global headlines captured the moment perfectly. Africa becomes economic powerhouse as UK influence fades. African investment surges into Europe as British industries decline. Global power shift. Africa rises, UK struggles. The conclusion was unavoidable. Africa had not risen because the UK fell. Africa rose because it finally unlocked the full spectrum of its potential, something the world had never allowed it to do before. But in rising, it exposed the fragility of the old powers whose influence depended on Africa remaining weak. London never expected that its downfall would make Africa richer than ever before. It never expected that its industries would crumble while Africa's soared. It never expected that investors would flee Europe for African markets. Yet the signs had been there all along. The youth, the minerals, the land, the creativity, the innovation, the unity. Africa had everything it needed except permission. And once it realized it never needed permission in the first place, the world order changed forever. The UK watched from the sidelines as Africa claimed to place it. Always deserved not as a follower, but as a global leader shaping the future of economics, technology, and power. In the end, the truth was simple. Africa rose, Africa prospered, Africa transformed. And the UK, unprepared for the shift, became the first major power to experience the full force of Africa's new era. A power shift London never expected, but the world will never forget.